Good morning, everyone, and welcome to the Quantum Leap morning homework session and trade level setup for the ES. It is Friday, January the 17th, 2014. This is Quantum Leap. If you're visiting us from Twitter or watching on YouTube after the fact, we are a self-organized learning environment. We have had a private Skype chat room for over 4 years now. If you're interested in coming in and checking out the Skype room, you can give me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. I am the head moderator and founder. Each morning we come together to do our homework and set up our trade levels for the ES and look at gold. This is a long weekend. It is Martin Luther King. So I think it's going to be light volume today, so consider this like a holiday Friday. So I think we'll see light volume, and my main hypothesis is a slow drift to the upside to test some upper levels that we'll look at. But before I get going, I have to do this. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. And any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence. All right, so let's start off with the numbers. Of course, again, we keep talking about this number every day this week as we chop around in this balance area at 1837.75, our year open. That determines whether or not we are positive or negative for the year. So the bears and bulls are definitely going to be fighting this area. Bears want to keep us below 37.75, and the bulls want to get us back up so we can continue this long, slow trend to the upside. Other numbers to keep an eye on above us right now, obviously, is the 1845.75, which is our year high, which is just below the all-time high and last month's high at 1846.50. And of course 1846.25 is the gap close that we still have not closed, and the month close from December, and the year close for 2013. Nothing else in the macro numbers. We opened the Globex yesterday at 1841.50. Put a Globex high in. We went and took out that naked VPOC or naked cross at 1843.75. Again, if you're not watching your crosses, start doing so. Do your own research on it. Very powerful. Very, very, very seldom that a number goes without getting revisited. Our Globex low was 1836.75. Our open for the RTH yesterday was 1839. You can see that the Globex numbers were starting to become higher. Green is higher, red is lower, looking for trends. We opened auction in range, and basically yesterday we had a very wide opening swing, which is indicative to a rotational day, and oh boy, did we have a rotational day. We had chop and broccoli all day long. Our initial balance high, 41, initial balance low, 36.25. You can see how this 36, remember when we got up into this area and went and made that first push higher after we accepted value at 22.75, that 36.25 was the area we were trying to hold value. You can see how it's becoming a bit of a support, a floor between that 34 and 36.25. Our initial balance was smaller than normal, again indicative of a rotational day. But all our intraday RTH numbers were lower. Our 1230 number was lower at 40.50. The high was lower at 41. The low was lower at 34.50. The close was lower at 36.25, and our VPOC shifted down to 39.25. So a little bit of a inside day yesterday, a little bit lower value. which is our our value area, was lower at 1840 and a quarter, high at 1837 and a quarter. But again, it was a very, very tight day, and we broke the IB to the low side at 952. So again, in that secondary pocket that we look at. Taking a look at the news for today, this is our QLTP. This homework sheet that you see me working on, this is what generates this, what we call our QLTP, which is basically a ladder above the previous day close and a ladder below the previous day close with all the levels that we track that are based on the different methodologies. Why do we do this? Because we want to see that if we come up to 1845.75, what would, just as an example, where would other traders possibly, trade from? And obviously knowing that key number traders are going to trade off of, highs, they might activate there. So we use it as guides just to see where we might find some support and resistance and traders activating. We had building permits this morning, gave us a little bit of a push down going into the RTH open, but nothing significant. Of course, we've got U of M consumer sentiment coming up at 8:55, and then we've got JOLTS job openings. We also have Obama is speaking at 10 a.m. Central, so that could spark some headline news as well. In terms of the ATR targets, let's go over to the daily report. Right now we have a Globex high of 42.75 and a low of 1835.50, so it is our full session high and low right now, and our full session ATR upward targets. This is based on a 20-day average true range. Our ATR target above is 1848.50, and our ATR target below is 1829.50. And again, both these levels hitting very significant areas on our charts. So let's take a look. I like to look at the macro to the micro, always keeping in mind where we are within the trend on the different time frames. Of course, the monthly, extremely strong. We haven't closed below the 20 SMA in the last 2 years, and so far this year. We've got good slope and separation on the 9 EMA and the 20 SMA. These are the moving averages that I will always use. These are the moving averages that I use for my naked crosses as well. So the trend is very strong. We're trading in the upper distribution of the prior month, trading near the all-time highs. So the trend is very much intact on the monthly. On the weekly, same thing. We had this, little bit of a down move. They closed below the 20 SMA. That's the first close that we had below. The 9 EMA. That's the first close we had below there since this one all the way back in August. But then we had the nice move back. We retraced all of that and then some. And of course, we created this little bit of a tech gap. We've now closed the tech gap this week, but the trend in slope and separation is still continuing, so the trend is intact on the weekly. On the daily, same thing. This was the down move that we had. Then we popped back up, closed above the 9 and the 20. This is a naked cross right here, just to give you a good example. It's a naked cross on the daily. So it's a daily time frame. I trade off of the 5, the 15, and the 30-minute ones, but I also pay attention to the daily ones, and you can see that the naked cross down here is at that 1795, and at 1795, based on many different methodologies, is a key area that we expect to come back and test in the future. But right now, we had a little bit of weakness. We had closed below the 9 and the 20. Then we popped up the very next day, took it all back, and currently right now we're trading above the 9 and the 20. We're losing a little bit of separation, a little bit of slope. So this, the upward move, the momentum is waning slightly. Doesn't mean that we can't accelerate and move. So the trend is still intact. It's just not as strong. We're getting a little bit of a sideways consolidation here as we find value in these new areas up here. Going over to the geometric chart, we have broken back below the downward sloping fork upper line. We're currently, trading right on top of it right now. We had this energy point that we were watching. It's supposed to come and play on Monday, it is trading. Basically trading right around it right now, in around the 1836 and a quarter, 1836.75. But we are holding the center line of the midterm upward sloping fork. So, you really want to, if we're going to get a continued drift today, we want to stay above both the upper line of the downward sloping fork and the center line of the upward sloping fork. I don't think it's possible today, but a test of the upper fork will bring us all the way up to that 1875 level. We'll take a look at that on our fib extensions. But if we get below this, I would be looking for a move down to that 1829.50. And remember that 1829.75 is a key CLV and composite low volume node below us. It's also right now our full session ATR target low. And you can see how that all lines up between the composite, between the moving average, between the average true range. It gives us a fairly decent lower target below. So let's take a look at the trends coming in on the shorter time frames. Go to the 4-hour. Just where we are in the trend intraday. You can see that we are trending up pretty strong on the 4-hour. We've come down and we've been struggling to hold above the 9 EMA. We've lost slope. We've still got a little bit of separation. We've got a naked cross on the 4-hour. Oh, look at that, down at 1829.50. How surprising is that? But right now, we're we had this technical gap that we created against the 9. The technical gap is where the price moves away from the EMA, creates a space in between, and this is, always closed through either time or price or a combination of both. You can see that this one was closed by time. In fact, here's a beautiful, Mr. Sneaky reversal coming down to close the gap. Going to the 30-minute, same thing. We closed that technical gap. We created the technical gap, and then we've come down and closed it, but we've actually come all the way down to the 20 SMA, broke below on the news, and now coming back up to test the 9 EMA from below. So the trend really is stalled out on the intraday. Let's just go to the 5-minute to see if we're seeing anything different. Nope. We came up to the overnight high, stalled out, consolidated there, and then we broke back below the 9 and the 20, and we've been trending down on the 9 and 20. Created this technical gap down here. Well, we created one here, closed it, fell back down on the news, created another technical gap, and come up and closes. These are really nice, trade setups. If you see a nice technical gap, especially if you know the FUBAR tech gap, Mr. Sneaky setup. If you follow the quantum leap room. But right now we've closed above the 9 EMA, but we're definitely, the trend coming into the open right now is still to the downside. Look for them to come up and test and close the gap up here on the 20 SMA if we stay above the 9, and that will bring us up around that 1838 area. So let's go take a look at, one more thing. I want to just go over to this chart. This is the daily with the fib extensions. This is, you can see we come up to the 38.2 retracement up here at that 44 area. Our 50% extension is 55.75, and our 61 is 66.50. So just keep an eye on those two levels. Those would be upward extended targets to the upside today if we really get a strong positive holiday drift up. All right, let's take a look at the big picture on the composite. So as I was mentioning, when we came up here, and we broke out of this balance that we were down, we had this really strong balance down here for quite some time, where we traded from November 14th through to December the 19th. We're trading in balance around this microcomposite VPOC at 1781.50. 50. Then we broke out of balance, came up here, and then the first area that they held value was 1822.75. Then they moved up and they were trying to hold value here at 1836 and a quarter. That's why that 36 and a quarter keeps coming into play. Now it's becoming our support as they, as they moved up again to, try to make news high, had the lower high. They were trying to hold value in the last 2 days up here at 1842.25. That's the most accepted price in the last 2 days. So they're trying to hold value there. They're having trouble holding it. They come back down, and they come back down to that first level below us at 1836. Push through to the other side of balance, which is on that CLVN at 34 and a quarter, and then we've rotated back up and tried to make a new high at 42.75 overnight. Couldn't hold up there, and now we've come back down and drifting down, and right now we're trading right at the 2014 year open at 37. So 37 is going to be very important level. So above it, look for a drift up and a push to the upper side. We'll talk about where those targets are. Below this 37.75, look for rotation back towards that 36 and a quarter with the other side of balance down here at 34 and a quarter. If we get below 34 and a quarter, you've got 33 and a quarter and the bigger number, which is the overall microcomposite VPOC, or the most accepted price, most traded price, going back to our December 23rd right through to yesterday. Our fair value right now is still down here at 1831, with the other side of that balance being that CLVN at 29.75. Of course, we were talking about that whole level at 29.75, 29.50. This is really my downside extension, or not my extension, my downside target. If we get back below 34, I'd be looking for a drift down towards 31 with a push through to 29.50 to test those levels and close those naked crosses and test the 9 EMA with a possible push through down to this 27 and a quarter, 25 area with the extended target down here at 23.75. So let's take a look at what that looks like on the overnight and move our overnight numbers over. Of course, our overnight high is just 2 ticks above the naked VPOC at 1842.25. Our overnight high at 42.75. Our overnight low 1835.50. Which is right at this little HVN. There was this, it's not a real key LVN at 1835.75, but it's something that you'll pay attention to with the overnight low just being below it. Now, we did have a double distribution last night with a key LVN at 1840.50. And remember that 1840.50 is right there at that key CLVN. And what I expect to push push up to if we get and we can get back above that 37.75 year open. Overnight VPOC currently is trading at 38, but that could shift down to 37 and a quarter if we trade there. For the time being, I'm going to put it here at 38, and then just keep an eye out in the next 25 minutes whether or not we get a shift down. I don't think we'll get a shift up. Of course, our gap open, our gap close is down there at that 36. So you've got that 36 number coming into play on the gap close as well. So let's take a look at how I'll be setting up my levels to trade today. Of course, that 37.75 is a key level, but really I'm going to be trading off of this 36 level and this LVN at 35. So I'll be looking for responsive buyers to step in there. Of course, this 34.50 is right there at that CLVN at 34 and a quarter. So that will be a trade level for me for multiple reasons. A, to break out of the range low at 34, and if we get below that range and get below that 34.25, again, I'm looking for a move down first to that 33 and a quarter. That is the microcomposite VPOC. Where they were trying to hold. You know, if you were in homework the other night, when we moved down here, they moved down, created a 2-day VPOC down here, microcomposite VPOC down here at 13 as they accumulated, and then they rotated it back up, and we didn't shift the the 2-day microcomposite VPOC until the end of the day, right at the end of the day, and then they shifted the VPOC back up to this 33.25 level. So if we get below the range low, I'm looking for a push down to this 33.25 to take out the naked VPOC and the naked gap close, and then a push through to the other side of balance, and that target is going to be down here at that 29.50, 29.75 level. And then I'll be looking for responsive buyers to step in here, and if they don't step in here, then I'd look for a push through to the other side of that balance down at 23.75, 24 area. So that will be another target and trade area that I'll be looking for down here. Put both a trade and a target. Doesn't want to go in there for me. All right, well, we know it's a target and a trade area. Above us right now, we've got our value area low from yesterday at 37 and a quarter. We're currently, breaking down below that. If we stay down below the developing value area, or not the developing value area low, the value area low, and that year high at 37.75, which also happens to be the midpoint or the 50% of yesterday's RTH session, I'd be looking for a gap close on the open and a push down to take out the overnight low. If we get above that 37.75 and get back into stay inside of value, then I'd be looking for a rotation back up into this 39 and a quarter, with the upper side of that being that 40.50 and that LVN from the overnight session right there, and the value area high up here. So this area right here at between 40 and 40.50 is an area that I'll be looking to do business. Watch for responsive sellers to step in here to hold us in value and rotate us back towards that VPOC from yesterday at 39 and a quarter. Of course, above it, then we're breaking back out of value again. And if we get up above that value, look for them to go and take out the RTH high. We've got a naked close, a gap close up here at 41.50, and then above that is the naked VPOC at 42 in the overnight high, 42.25 in the overnight high up here at 42.75. So I'll be taking the breakout of the value area to push through to test the range high and then move to the two targets. And the main target above, of course, is going to be this naked VPOC above. And then the extended targets above, of course, are the the year high, the gap close, and the all-time high. So this whole area up here is going to be a trade area for me for responsive sellers to step in, but it's going to be my main extended target above. And then above that, I'm looking at that 50% extension up at 55.75. But I don't really anticipate getting up that high today. I think with the light volume, we'll get a drift up to test this 1846 area and test the two highs, the year high and the all-time high. But again, we're trading below the year open right now, so my main hypothesis on the open, if we stay below 37.75, is to come down here and take out the overnight low, test the 34, possibly push through to the 33 and a quarter with an extension and a push through to 29.75, at which point in time I think we'll see some pretty strong buyers stepping in to rotate us back up to come and test that range low at 34 and a quarter and try to take us back into range. We get inside and above 37.75, look for them to take out the 39 naked VPOC and test the value area high, and the other side of that balance at 40.50. So that's basically what I'm looking at in the ES. I'll post that chart in the QL room in just a few minutes. Looking at the Keltner, you can see that the Keltner center line is basically right there at 38 and a quarter, 37.75. So really defining, our year open and a positive or a negative year. A move to the upper Keltner line will take us up to 43.25, or take out those immediate targets above at the overnight high and the naked VPOC at 42 and a quarter. If we stay below the Keltner, you can see that the target below is down there at that 33 and a quarter, which is right there at the naked VPOC and the naked close down below us there. And that would be the immediate target below the range. So you can see, though, we do not have any slope at all on the Keltner channel. So, basically this market is chopping right now, and we could just easily, my secondary hypothesis, we stay inside a range again today and just chop around between 40, 50, and 34, and a quarter. Let's take a quick look at gold. Gold, currently right now, we were trading inside of this balance area around the new microcomposite at that 41. Remember, that was a target for us above when we were trading down here. Now we've broken above. We've come up and hit the immediate target where we are trying to hold value. You can start to see how this works. We tried to hold value up here before at 51. We came down to a prior level that we were looking at, the value area high. They tried to get us back into this value area a few times. They rejected it, came up, held value here at the 41 at the value area high, and now we've moved up and come up to and tested where we're trying to hold value at 51. Always in search of buyers and sellers. So they're looking for sellers. They came up to where they had found fair value before, and now they're holding us down. So the key right now is if we can get above this 49 area again, I'm looking for a continuation of this push up back towards that 55 CLVN, the other side of balance around here, and then the target that we keep talking above here at 57. Now I want to show you something really quickly. I know I'm running long, Howard, but this is something that everybody's saying that they think gold is toast. The only thing that I'm not saying that there couldn't be some more downward pressure, but on the bigger picture, we have a descending, broadening wedge, and this trend line here, the upper line of the descending, broadening wedge, is a key level, because if we break above this line, then I'd be looking for a much bigger move up in gold, and with the first target being up here, up here in around the 1360 area and 1433. This should be a strong. These are usually good, strong reversal patterns when you break the upper line of this descending, broadening wedge. Of course, a test of that will bring us up to that 1275, 1274 level, which is a key level that we keep talking about above us. Not sure we're going to get there today, but certainly with the holiday, it could be possible. Anyway, that's what I'm looking at. Howard, do you have anything you want to add today?
Yeah, Yeah, I'll cover a couple things.
Okay, over to you.
So looking at the daily chart, from our high of the year, we've made a three-wave pattern lower, which is a corrective pattern. Since then, we've accelerated back up. We missed hitting our high by 3 ticks over here on the 15th. Yesterday, we had an inside day, Mr. Sneaky, but we did hold support, didn't quite get down to the 90 EMA. So far during Globex, we're still inside yesterday's range. So this 9 EMA here will be key support, and just below that is the 20 SMA. Okay, so looking at market breadth, we still see that the transports are holding their lead over the industrials. The transports are up just under 1% on the year. The transports are. Industrials are down almost 1% on the year. In all of last year, the transports maintained their lead over the industrials. So far this year, that isn't changing. So looking at the sectors, so far we've got a pretty wide range for all the sectors. XRT down here is the laggard. It had been the leader for much of last year. Healthcare has been strong right out of the gate this year. And we've got a mixture of sectors. Some are still negative on the year. A few have pushed positive on the year. Initially, it was just healthcare and the technology stocks that were positive, and except for a little brief dip here, the technologies have stayed positive, and it's just recently that several others have become positive after a slow start at the beginning of the year. And finally, we're looking at the middle graph shows advanced declines on a 10-day average basis, and the lower chart shows up volume versus down volume on a 10-day average basis. So our last peak, let's shrink this up a bit. Our last peak was here on 12/27, just a day or two before the all-time high, and since then, price has been going, relatively flat, while the advanced declines have been getting weaker. And as of yesterday, they're still just above the break-even point, the 50% level, and same with up-down volume, just above the 50% level. So more net advancers, more net up volume, but it's been getting weaker as the market is going flat. So we're seeing a little bit of a non-confirmation. So that's all I had, Doug. I'll turn it back over to you.
Sorry, I was just had myself on mute. That's going to complete our homework session for the morning, January 17th, 2014. As always, trade well, trade safe, and we'll catch you on the flip side.